Welcome to this week's episode of the African Agri Overview. In this episode, our spotlight is on Kenya, which should be dependent on Tanzania maize imports over the next 6 to 7 months. All in this episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Zimmatic irrigation systems. Zimmatic's pivots and lateral move systems are truly cutting edge, combining top-notch components, exclusive designs and innovative features for a reliable, long-lasting agri solution. Before we dive into the economic roundup, however, I recommend reaching out to our expert market analyst Jacques Pinaar for more detailed insights into the African soft commodity markets. He's your go-to guy for the inside scoop. But as usual, let's start off by looking at the latest oil prices. Oil prices have remained fairly stable over the past week or two, still trading around $84 per barrel. There are now indications that we may see significantly lower demand from China this year, which, despite the lower supply from OPEC and geopolitical conflict, could keep oil prices on a relatively lower level. Additionally, weaker than expected retail sales figures were announced in America, which caused the dollar to lose some steam. But with that said, Jacques will now tell us more about the latest developments in the grain markets of Kenya.
Welcome to all our viewers. We looked at the Kenya maize picture early December and feel it is an opportune time to revisit. We would like to get a better understanding why prices remained relatively low despite prospects of a material import campaign soon. As always, take note, all numbers used in our graphs are our best estimates, given information at our disposal, and should be seen as such. Very little statistics are available on the Kenya agricultural markets, and when government do publish production numbers and estimates, these tend to be inflated. This graph illustrates our Kenya maize balance sheet since 2019 and our forecast for the 2023-24 season, running from October 2023 to September 2024. Most of our Kenya contacts expect a 2023-24 crop of around 2.7 to 3 million tons, normal for Kenya, compared to government projections of 3.6 million tons. This production estimate includes the long-range crop that harvested from October to December 2023 and the short-range crop to harvest around April. The long-range crop normally produces around 85% of annual production and the short-range crop around 15%. Annual consumption estimates around 4 to 4.3 million tons, with a projected import need in the region of 1.2 million tons. Most imports expected from April until September. Kenya resumed imports from Uganda late November, but Tanzania prices were too high. However, during the last few weeks, Tanzania prices softened slightly and Kenya prices rose, and we therefore expect imports to resume shortly. Tanzania is usually Kenya's main supplier, and this year should be no different. So, general view, Kenya prices should follow Tanzania import parity until around September. We have asked the question if Tanzania and Uganda will have sufficient exportable surpluses to meet the expected Kenya import need before their next long-range crop should harvest Q4 2024. We are quite confident that the answer is yes. The market feel the 2023 Tanzania crop was probably underestimated, i.e. a bigger exportable surplus. Outlook for the new Tanzania crop to harvest from June-July favorable at this point, and talk of a potential well above average crop. The next graph indicates the Nairobi maize price history since 2016, volatile to say the least. Kenya should be an importer of maize from now until September-October 2024, and therefore import parity should be the benchmark. The brown line on the graph indicates current import parity from Tanzania, and the red line Uganda import parity. Nairobi maize currently trading at $340 a ton at Tanzania import parity. Ugandan origin maize is of inferior quality when compared to Kenyan and Tanzanian origin, aflatoxin contaminated, and usually trades at a discount. Big commercial mills unlikely to buy Ugandan maize as they are well policed and need to protect their reputation. We understand smaller food mills are buying the Uganda maize and blending with Kenyan maize, which delivers lower priced maize meal. Therefore, bigger commercial mills struggle to compete, and the reason for relatively low maize prices despite the imminent import campaign. In short, it has postponed the need for higher priced Tanzanian maize imports. However, our contacts expect Tanzania imports will resume next few weeks as Kenya prices now reflecting import parity from this origin. General view, Kenya prices should follow Tanzania import parity short, medium term. By June, July, when the new Tanzania long-range crop should become available, import parity levels could decline. This season, a discussion about crops is not complete without touching on the El Nino weather pattern, which is expected to prevail at least until middle 2024. As indicated before, Central East African countries like Kenya, Uganda and Tanzania normally receives normal to above normal rainfall, and Southern African countries below normal rainfall during El Nino. It is dry in Kenya at this point, but normal for this time of year. Kenya will only plant their long-range crop from late March. We should know soon if El Nino is shaping up to benefit the Kenya long-range crop to harvest from October. Next week we will discuss the Zambia soya market and examine how the significantly smaller expected new soybean crop could impact the local Zambia market and its usual export destinations. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you very much, Jock. For more detailed analysis and forecasts about the African soft commodity markets, make sure to contact Jock Pinaar. These videos are made possible by Zimmatic Irrigation Systems. I'm Dr. Johnny van der Merwe, and thank you for watching.